Is my mic working? Good morning, everyone. Today it's Friday, March the 13th. 13th. Oh my goodness. I just realized Friday the 13th, but even then, we are still having a green day in the markets today. Despite fears around the oil prices, I think even though we have seen GDP actually come in lower than expected, perhaps the market is actually interpreting this as bad news is good news. And I think the market is generally relieved to see PCE come in line with expectations. In fact, PCE year over year came in slightly lower than expectations. Welcome everybody. All right, just give me a minute as I pull up everything that I want to go through today. Do we think that the green that we are seeing in the markets today will continue? Good morning, everybody. For those of you who actually missed out on the Bitmine valuation that I was talking about earlier on Monday, I reposted that segment of the live. You can take a look at that so that you can have a rough idea, basically, with what Bitmine is doing in staking. Roughly, where will their valuation come in? Especially right now, we are seeing Ethereum bounce above 2100. We were having some friends over for dinner, so I didn't really see what was happening in the markets actually until now. And I believe I saw someone posting that, or a couple of people actually posting that Ethereum is trying to break past the 50-day moving average. Okay, since then we seem to have come down a little bit. I mean, personally, I wouldn't be too excited just yet. It's barely touching the 50-day moving average. I know Bitcoin was at 74,000 earlier today, or earlier in the market when the market was open. I mean, how are your portfolios today? I think everybody should feel a little bit more relieved after the last couple of days. All right, welcome to the 8 people over here. All right, before we listen to what Pete Hegseth have to say, let's just take a look at how the markets are doing, because I really didn't see how the markets are doing. I was at dinner with friends earlier on. Let's take a look. All right, so the S&P, I would say the S&P is barely, yeah, it's actually flat over here, but we are kind of in no man's land. I do think that it seems like we want to test the 200-day moving average, and if that is the case, we have another 10 points down to go to around 655. From there, we will see what happens. If we bounce from there, honestly, that wouldn't be the worst thing in the world. It will be a correction, small correction, but a correction nonetheless, from close to 700. So the high was around $697.84, and then if we drop to, yeah, it will be around a 5% correction, right? If in fact we are at a 5% correction now, close to. So if we drop down to the 200-day moving average, 5% correction, I think it's healthy for the markets. And if we can get some clarity around what is happening in Iran, I'm sure the markets will eventually recover. So I think what is worrying some people right now, I mean myself included, is that a lot of the names that we are holding are already down 20-30%, yet the market is barely even down 5%. So because of that, of course, the fears are that if we do get a bigger market correction, then these names, Amazon, Google, things like that, companies that already have a 10-20% correction, can continue to go down even further. All right. The Nasdaq, I think you're seeing more or less the same thing in the S&P as well as the Nasdaq. Both of them are trading below the 50-day moving average, but basically in no man's land. They haven't really touched the 200-day moving average. Seems to be quite consistently hovering around this 597, 598 zone. Okay. So I think the market really just wants to have a correction. It's finding a reason to, but we are not entirely giving the markets a reason to correct. I think at first when I saw the GDP number, I expected the markets to be a bit redder than today, but I think because the PCE came in slightly less than expected, I don't think the markets got too worried after that. So which means to say, I think the market is putting a little bit more weight on inflation rather than GDP. Oh, Hood is down. One of the reasons why I hopped on today, primarily is to go through some of the moves I made in the portfolio, and I just wanted to update, the spreadsheet and things like that, and talk through some of the thoughts that I have. I can't be on for too long today. I do have a hard stop in about an hour's time, around 11:45, because it's 11:45 p.m. my time, and I have some errands to run. But today, the main focus for me is to talk through the portfolio, see what's happening in markets right now. Hi Bob, hi Top. Fintech has really been clobbered. Hood is down for some reason today, right? Let's take a look at Hood. Let me go over here. If I look at finance, okay, Robinhood down 2.6%. Okay, really for no reason, while the rest of fintech seems to be up. Fiserv up 1.1. I mean, Fiserv has really been clobbered. I think, of course, if they do recover, I believe I see quite a few people open a position in Fiserv around this level. If they do recover, the recovery should be quite a strong recovery. Weibo, $5.30, up 1.7%. Chime, 21.60, basically flat on the day. Pagaya, up 0.5% at $10.90. Toast, $28, up 1.4%. Eating prata? Not really. I just had steamboat. I had to go and help to clean up and everything also. I just finished a steamboat hot pot. So yeah. That's why I have no idea what is happening in the markets. I saw GDP come in at 0.7 when I was eating, and I thought, oh crap, we're going to have a pretty shitty market. So I was surprised to see the market open green, and Bitcoin at one point was up 10%. All right, how are you guys feeling about Nvidia for GTC next week? I think I was more worried about their earnings than GTC. GTC is usually good. They're usually giving us the roadmap for what to expect, and I think with Nvidia, I think that the message has been pretty consistent from Jensen, right? That we are only in sorry, we're only in the second phase of the AI expansion story, and I think the inference build out, we might get some more clarity over what to expect in this second phase, building out the AI, the inference software, not software, basically AI inference, right? Nubank up 1.1%, dLocal, okay, basically flat. Firm. So I think fintech is, I wouldn't say really green, a little bit. Zillow up 5%. Where's Rocket Mortgage? Do I have Rocket over here? Sazo. Rocket, oh, Rocket should be a little bit higher over here. Did Zillow report earnings? So because I see Rocket Mortgage is only up 0.3% and Zillow is up 5%. That's strange. I thought they should both be affected by the interest rate story. All right, so I think a fairly green day, slightly green day for the finance sector. I think because of where the PCE is, I think people are generally a little bit more feeling a little bit more comfortable about where inflation is going to go. No more stagflation fears. In fact, actually yesterday, with how low the markets actually went, I closed out one of my cash secured puts a bit early because I had $18 SoFi cash secured puts expiring today. Wasn't sure what to expect with inflation data, and the market is really in a pissy mood right now. So I actually closed it early. I mean, it was around a 40% profit. Let me see if I can show you guys. Because at this point in time, for me, my cash secured puts were at 18, but it was still profitable yesterday because Yeah, because of the time decay, right? Because of theta decay. And I closed it early. Let me see whether I can show you over here. Right, so in my so you can see over here, yesterday I bought back 10 cash account puts, closed it at 44 cents. But if you go all the way down, I believe I got these at around 70 over cents. Let me see. Yep, we got them at around 75 cents over here. Right, we got them at around 75 cents over here. We closed a bunch of them around 40 cents. So it's around a 30-40% realized premiums, that which was fine to me because I rather realize the premiums, free up the capital. And right now, even if I were to buy SoFi right now, I can get it below the strike level at $18. So I'm perfectly fine with that. For BMNR, we actually sold some cash secured puts for 2nd of April at $18. So now we basically have a squeeze on BMNR. We have $30 strike expiring on 2nd April and $18 strike expiring on 2nd April as well, strangling BMNR. Hopefully, I mean, despite the run, I really think that there are going to be, even if we do see a very strong momentum behind Ethereum, I do think that there are still certain resistances in BMNR's chart that will tend to, on a technical basis, at least hold back the stock a little bit. I do not think that we will. Okay, famous last words, but I really do not think we get to $30 and hold $30 by 2nd of April. Why did the indices go? Are the indices down today? I thought it was slightly up. Are the indices down today? Or are they just down now? They just turned negative. All right. So earlier on, earlier on, if you didn't join the stream in the first couple of minutes, I was saying that both the S&P and the Qs are in no man's land. They're not above any support. There are no price levels anywhere nearby. So it seems like if you take a look, this I wouldn't consider this extremely strong resistance or extremely strong support. You can see it bounce once here, twice, and then right now we are testing this again. If we do not close the day past this, I would call it $671, then I would think that we are likely going to test the 200 days moving average on the technical basis. Of course, tomorrow Trump can come out and tell us that oil prices are coming down. He secured the Strait of Hormuz and things like that, and we can rocket up. Sure, all of these things are possible. Talking about it on a technical basis, I think if we do not close above this green line today, we might just test the 200-day moving average, which would be around a 5-6% correction, which is pretty healthy. I mean, considering we were just going up all the way from April of last year. But I think the results are pretty concerning when you look at it from the GDP perspective. 0.7% GDP isn't what Trump definitely is looking for. And at the same time, basically what saved the day, or what saved us from being completely red on the day, was PCE coming in more or less in line with PCE year over year, just down by 0.1%. So PCE year over year came in at 2.8. Expectations were 2.9%. So I think the results were not bad, but they were not fantastic as well. Combine that with the fact that on a technical basis we are in a little bit of a no man's land for the indexes. So I think we are just basically waiting for bad news at this point in time. So GDP, let me just zoom this in for you guys to see. So for GDP, we got 0.7%. Expectations was around 1.5%. And I think this was a lot lower than what I expected. But I think what really saved the market, or at least perhaps saving is the wrong word. What kind of make the market or gave the market a little bit of hope was this PCE coming in line at 0.3%, year over year down 0.1. Sorry. Year over year, we are getting 2.8%, down as 0.1% compared to expectations. But core PCE is still running relatively hot if you consider the fact that the Federal Reserve has long been telling us that 2% inflation is the target. Now, I think one interesting thing to take note over here, 2% target has always been the number that is coming out of the mouth of Jerome Powell. Anthony Noto himself actually says that he finds it perfectly fine for the economy to be running at 2.5 to 3% inflation. So it really depends which school of thought that we're going to have from the Federal Reserve after Jerome Powell leaves. Right, because I think with Kevin Walsh, he's a little bit of a hawk, but at the same time, he is also someone I'm guessing Trump sees as an ally. So how he will respond in the face of this really is anyone's guess. Is he going to stubbornly maintain 2%, or he's going to say that, you know what, we are in the AI era right now, 2.5, 3% is perfectly fine. AI is deflationary. Nobody knows. I think historically he has had the reputation of being a hawk and being wrong on a number of times. But at the same time, he's Trump's friend, and I don't think that Trump will appoint someone that he knows is going to go against him. Am I going to do live streams every day? Long time viewer, thanks for the support. Definitely. Okay. To answer your question, yes, I'm going to do live stream every day. Not in March. In March, I'm using the time right now. I'm going to go live 3 times a week, likely to be on Monday, Wednesdays, and Fridays, so that I can test out the streaming setup and things like that and get a little bit comfortable with it. But I will be back in Singapore again, I think on the 3rd or 4th of April. And from then on, we will be doing a daily live stream every night. And particularly for, oh yes, you are right. Trump did appoint Jerome Powell too. So, and I think to be very fair, I think Jerome Powell has done a fantastic job since he has become Fed chair. Yeah. And Jerome Powell did not, in a sense, do whatever Trump wants. Whether or not Kevin Walsh will do that, we really don't know what's happening behind the scenes. And yes, so I'm from April 3rd or 4th, I can't remember when I'm back in Singapore. I'm just in Vietnam for a couple of days. From then on, we will be doing daily live streams on the weekdays. So the nighttime will be, focused on covering the US markets. But I plan to do some of my deep dives and some of my research live as well, so that you guys can ask me how I put together some of my videos. Because sometimes I put together the longer 20, 30-minute videos on the deep dives, and people have a lot of questions. So I'm thinking that I'll give you a little bit of a behind the scenes on how I conduct some of that research. And as I'm doing the research, you guys can just hop on stream and ask me a couple of questions along the way, try and understand the companies a little bit better. I think that's the whole point of the new portfolio as well, so that we can explore some of the different companies together. So for example, Circle is one of those companies that I've been studying. I haven't managed to make a video about it, but if I were to able to do it on live, and then after that just clip out certain parts to make a video out of it, I think for the people who want to hop on and ask a question, you can do that. But for people who might be a little bit busier, you just want the TLDR, then you can watch the clip videos after that. Circle. So yeah, I think a couple of I've been talking to a couple of people trying to understand stable coins, trying to understand how they work in the banking infrastructure. And I'm quite surprised that even in Singapore, we are getting a lot of people on the back behind the scenes interested in changing out some of the financial infrastructure. So I think there is a demand for stable coins. I think how it's going to be regulated, I don't expect Singapore will never be the first to implement any sort of new technology. We will wait and see other people implement first, and then it's doing well for them. Then we will move into that sector. But I was talking to a couple of people. I think it's something that the banks are looking at in Singapore, but it is not something that is like top of mind at the moment. Yes, for Circle, they have USDC. So right now with Circle, I think the risk that most people see is that they take your dollar, right? They give you USDC, you can transact however you want with USDC, and then they take the dollars that you give them, they put it into the Fed funds. But if the Federal Reserves are going to be cutting rates, then they're going to get lesser and lesser returns on whatever that they put inside the Federal Reserve. So that will actually directly affect their revenue. However, last quarter, what we saw is that they actually reported over 75.6 million trillion billion. Oh, let me go and check. 75.6. I just remember 75.6. Outstanding circulating supply. Let me see. Okay, if you take a look over here for Circle, if I go to segments and KPI, this is what actually help investors feel a lot more confident in Circle. You can see that they have 75.2 billion circulating USDC in circulation. This is a huge increase from December of last year, nearly a double, right? Double would be around 86 billion. So I think what investors are looking at over here, at least to me, if you are asking me, they are looking for an increased adoption so that even though they are getting less returns, as long as they're getting more dollars, that absolute figure that they're receiving from the yield based on their Federal Reserve rate of return should be more or less the same. So you can see over here, although the Fed funds have been decreasing from 5.2% all the way in September 23 down to 3.8% this year, they are still able to increase their operating revenues, right? They're still able to increase the operating revenue. So from September 23, well, we don't really get every number over here, but if you look September 23, okay, so March 24, you can see that they have nearly doubled their revenue since then, although the federal funds rate have gone down. Now, for me, one of the things that I am worried about is that how else can they monetize how else can they monetize their business? And then that's when you talk about some of the services that they are providing. Let me see. I'm pretty sure I have done a write-up on it. It's just that I've not posted it. Circle. I'm pretty sure I've done a write-up on it. Where is it? Okay, let me see. Stablecoin. All right, so basically in my notes over here, what I have for Circle, where am I? Okay, so in terms of Circle's stablecoin market share, right now they are not the biggest. Tether is the biggest, but Circle has around 29% market share as of late 2025, right? So they're not the biggest, like I said, but they are trying to be the most heavily regulated, the most compliant stablecoin, and that's why you are seeing institutions actually choose Circle as the option for stablecoin. So right now, when you do a little bit of digging, you realize that a lot of the people that use Circle or USDC, they have to go through Coinbase, and that is where Circle is trying to in a sense cut out the middleman, which is Coinbase themselves, and make certain arrangements directly with like Visa and Shopify, so that they can use USDC without going through Coinbase. So that particular deal with companies like Visa and Shopify is going to increase their profit margins. So that's the first thing. Then on top of that, if you look at their investor relations, they did talk about introducing certain services. Let me see. So the reason why I really the way I look at companies, I don't just look at, oh, this is what their revenue growth has been in the past, and then I just assume that they're going to do that and slightly lower into the future. I need to understand the exact numbers that as a business, what are you going to drive? What are the metrics that are going to drive revenue growth? So in terms of Circle, one of the things that, like I said, I'm worried about is that what happens when the Fed funds rate continue to come down. And during the earnings call, they actually talked about some of the services that they are offering out to companies. So let me take a look. where is their presentation? Okay, so like I said, this is Circle's investor relations. You can take a look. It's on their website. I will talk about it once I've completed my deep dive fully. I was really interested in Circle in the $60 ranges. The timing was really just nice. I didn't even realize they were having their earnings on that day, but I just literally put out a post on X saying that I'm looking at Circle. I didn't even know that they had their earnings. Earnings came about, and then the next thing I knew, they were trading over $100 a share. So I think what they're trying to do is that they're trying to introduce, they're trying to get people to use their own blockchain, which is called ARC. And from there, it's going to help, in a sense, I think they're trying to generate another source of revenue through services. So like I said, I'm looking into this, whether or not there's going to be tractions for some of these things that they are trying to implement. And I think if I see tractions in some of these things, along with what they're doing with their stablecoin adoption, then I would be a little more comfortable adding Circle to my portfolio right now. So right now, like off the top of my head, I know the numbers of Circle. The numbers look good. Why I haven't bought is that because with all these things, talking about developing ARC, some of the services that they are developing, I still need to get a little bit more of a deeper understanding on the chance that these kind of things that they're trying is going to gain traction in the mainstream before I decide whether or not I want to take up a position in this. If I'm just looking at it from a very high level, if it's just because of stable coins itself, then it does make a decent investment in the medium term. But if you're talking about a longer term, I need to know what's going to happen if eventually we get down to a lower interest rate environment, right? How are they going to generate these other revenue sources that is going to replace some of the revenue source that they are getting from the Federal Reserve right now? And I think it's similar to Robinhood. I think people in general with Robinhood, they are a little bit more concerned about, during a bear markets, if trading activities decrease, they are going to get less income from trading fees, and they have to, in a sense, recession proof their business. And I think this is where we are seeing Circle right now. They are trying to they're trying to protect their business, to build a bigger moat so that they're not so reliant on just interest rates to generate revenue. How does this impact BMNR? Well, BMNR has the largest market cap. Out of the 310 billion stablecoin market cap, I believe 60% of it is being built on BMNR. So I don't think, just because people are using, so to me, this is more on the broader thesis on stablecoin adoption. As we see more and more stablecoin adoption, and if Ethereum can maintain this 60% kind of market share over the stablecoins market cap, then naturally that's going to increase the price of BMNR as well. Built on BMNR. I think you meant built on Ethereum. I don't. I think ARC, if I'm not wrong, is their own. They're trying to build their own layer one blockchain. Yeah, they're trying to build their own layer one blockchain. So ARC is actually their own version of the layer one blockchain. And so when I was looking into this, like, why would anyone use ARC? And I think because I was thinking of it from the Ethereum perspective, like wanting everything to be on Ethereum, thinking that they're trying to compete with customers for Ethereum. But the reason that USDC is building up is so that they can save paying fees to some of these other networks, not necessarily Ethereum, because Ethereum's gas fees is pretty low. But USDC, the way that they have created their stablecoin is that it's multi-chain or something like that. I'm really not. I would say that I'm someone who has been looking into the crypto industry, but not someone super deep in it. So if I get certain terminologies wrong, please forgive me. But what I understand is that USDC is, you're supposed to be able to trade it on multi-chains. I can't remember what's the term for it, multi-chains. And See, I lost my train of thought. Supposed to be able to trade it on multi-chains, right? So the reason why they're building their own layer one is that in perhaps certain specific use cases with certain companies, rather than go using another layer one, they can use up to transact with that company and perhaps charge them lesser fee, especially if it's a smaller company. Yep. So I think this is the most important thing, because they are trying to find other ways to generate revenue. And of course, if it's a big company that already has their holdings on Ethereum, it's going to be easy for them to transact with Ethereum onto their own layer one blockchain. But perhaps for a smaller company that wouldn't mind using USDCs or Circle's layer one, then that is something that can generate an extra fee for them. So I don't think it needs to be directly competing with Ethereum. It has its own use cases for their specific case, right? So I think right now it's seeing whether or not there's adoption in what Circle is trying to do. I believe they are rolling out some foreign exchange kind of services as well. So I really have to look into the different ways that Circle is trying to generate revenue beyond just Fed funds rate, and what are the key business drivers for those different sectors before I can make a definitive play on Circle. Now, I think even if I did not know all these things right now, for the short to medium term, if you are just playing purely the stable coin trade, then I do think that even then it does make sense. But if you're talking about this as a long-term hold, then you need to know what's going to happen after interest rate starts to come down. That's basically my opinion. All right, so I'm just going to show you right now on screen. Okay, so the first thing I want to show you, yep, definitely adoption is key, right? Everybody needs to mint either USDC or USDT in order to participate in the on-chain economy. I do agree. I really think that it's either one of these two. I like it that they're trying to separate themselves from Tether by being a lot more regulated, a lot more compliant, and I think it helps some of these bigger institutions feel safe to go through Circle. Now, on the screen, what you're seeing right now, this is the update of the Weibo account. Let me see. Okay, so the SoFi position, I have actually, did I put it over here? All right. So, oops. So I'm going to walk you through the SoFi position. You can see that we have basically, oh, this him, sorry. With the SoFi position, you can see that we have basically lowered our cost basis all the way to $16.58. Now, I actually bought most of my SoFi below 10, and then I averaged up in the I think when they first fell from 32 to 26, I bought quite a bit at 24, 26, which is why this actually jumped up so high. But you can see with all the premiums that we have realized, it's actually still the cost basis is still down at 16.58. And I did trim I think 2,000 shares of SoFi initially at $28, $29 before buying back again. So now I actually have more SoFi than before I trimmed. Right, initially I only had 12,000 shares. I believe now my shares are nearly 15,000. Yeah. So I did quite a bit of buying in the mid-20s range, not thinking about the war. So that's why you can see my cost basis actually went up. But I don't mind. I mean, so far at 17, if I'm going to hold it, even up to $45, it's nearly a 3x from here. So the main transactions that happened were these three over here. These were the calls that you were seeing and the puts. So like I was saying, I sold this put on 19th of Feb, expiring on the 13th of March for $18 strike. And I wasn't really sure, seeing how the market was yesterday and with inflation reporting today, whether or not if we are going to go down below $18. I can definitely still choose to buy SoFi at $18, but I think with where the market is right now, I am just a little bit I'm a little bit more cautious in how I deploy capital. I would rather not use the money to buy SoFi at 18, because if there is a chance, like I said, I'm not talking about anything fundamentally wrong with SoFi. I'm just saying if the market corrects because Donald Trump comes up and does something else in Iran and the whole situation escalates, I'm basically saving my capital for such a scenario, because to me, it's just $18,000. My entire position over here, it's nearly what, 200,000, 250,000. So in that greater scheme of things, I would rather have the $18,000 of cash on hand for any sort of escalation in the Iran conflict, rather than to just be buying today, right? Of course, today we are basically hovering at $18. So I really don't know where it will close. It's around 17.95 today. I could buy it at 18, but like I said, I rather have the cash on hand. So because of that, I actually closed it at around 45. Okay, just now it was 44 cents. So if you take a look, the first one over here, it's in yellow. So I'll highlight in yellow so that you can follow. Otherwise, there are so many numbers, right? So over here, the price that we closed yesterday on the 12th of March. It is 21 days and it closed at 44 cents, not 45. All right, so we basically made $300 in premiums, supposed to be around $700. That's perfectly fine. At the end of the day, it's still a 2.4% monthly yield, so perfectly fine. The other two positions, although they are not closed, I've already indicated them as closed. Actually, technically, they are still open. They are going to be expiring today. But I think we can all agree that we can more or less count this as closed. I really don't think SoFi is going to hit $24, $25 today. So these options are basically expiring worthless. So we are keeping the entire premium. So you can see they close on the 13th of March, 22 days, 1 day later. The closing fee is zero. You can see on the $24 strike, we kept a total of $1,000 and $1,050 in premium. On the $25 strike, we are keeping around $864 in premium. So you can see total yield here is around 2.7. Here is 1.8%. All right. So this is for SoFi, and then in terms of BMNR, we just ran through this a couple of days ago, but the new addition over here is basically, okay, I put 13th of March because I did it yesterday, like past midnight Singapore time. So technically it's 12th of March if we are from the US. 13th of March for me because it is, it was early in the morning my time, but it was yesterday closer to market close. $18 strikes. I sold 15 contracts for 74 cents, expiring on 2nd of April. So this basically strangles my Bitmine position because you can see on the 4th of March, I sold a call as well at $30. So basically, I will keep both this premium if Bitmine stays between $18 and $30 between now and 2nd of April. So this should be closed. This should be open, right? Let me open this. So of course, we are hoping that both of these close entirely. If this close entirely, I'll be making around 6.2% return on the cash put and a 1.9% return on the covered call. And if both of these close, that would bring my, let me see. If both of these close, that will bring my Bitmine average down to around $37.14. Perfectly comfortable with that. We're just $15 off, $15 off the top. So like I said, not too concerned with that between now and 2nd of April. I do think, although Bitmine is a very volatile name, that there are certain resistance that it will have to get through on a technical basis before it can get there. Okay, so this is the main portfolio. How do I feel? Oh, sorry. Grab. I didn't do anything with my Grab position yet. I'm thinking of looking further out to sell a covered call, maybe 45 days or so into the distance. Perhaps there's a little bit more meat on the bone. Other than that, that's why I keep my Grab position relatively small because I can't do any options on it, right? But I do want to own Grab to get a little bit of exposure to the emerging markets in Southeast Asia. How do I feel about SoFi USD? I think it is I think they're moving very quickly, right? I think we are seeing adoption, not just of SoFi USD, but SoFi in general. We are seeing them ramping up their marketing efforts. I think with SoFi USD, it unlocks a new market for them, similar to what the loan platform business did. However, I think to monetize this aspect of the business, we are not going to see the monetization effect as quickly as the loan platform business. But I do think that SoFi USD is a way. I mean, Jamie Dimon said it. If you want to, you know, give yield on your stablecoin, then you should be regulated as a bank. So technically, what Jamie Dimon is saying is that the only company in the markets that should be able to give the stablecoin yields back to customers as rewards is SoFi. Whether or not he actually thought of that when he made that statement, I don't know, but that's essentially what he meant, right? Because he's telling all the crypto companies, if you want to give yield to your customers, be a regulated bank. Well, SoFi is a regulated bank. They have their stable coins, and they're able to technically, according to Jamie Dimon, in Jamie Dimon's world, return the stablecoin yield as rewards to their customers. I think SoFi is really undervalued over here because I think people don't understand stablecoins. Like, I think if you talk to the man on the street, I think most people are not, like us here, glued to the screen. I mean, if you're in Singapore and it's 11:30 p.m. and you are looking at the screen and it's Saturday tomorrow, you might be going out and things like that. You are not the average everyday man on the street. None of my friends know what the hell is happening with like Ethereum and stable coins and things like that. When I talk to them about that, they look at me as if I'm talking in some foreign language. So with that being said, adoption is still in the very early phase, okay? But at the same time, I do think like with the deal that they signed with MasterCard, it is definitely going to help to increase the adoption. But I think it's going to take some time for us to see that monetization effect. And the thing is, with stable coins, it helps the back end transaction. So the typical everyday person that doesn't really follow the markets, they're not glued to the screen every single day. They won't know what is happening, right? To them, I'm still transferring my money. Oh, okay, the bank lowered the fees. That's great. That's about it. That's probably as far as people will think about it. And I think if you're investing in this, you're investing in the future infrastructure of the finance and the banking economy. But you then have to understand that this is not something that is going to gain a lot of excitement very quickly. Right? So I think with SoFi, they are very well positioned. This is something that the markets, I feel, is underappreciating. And right now, I look like it seems to be the right decision to close my SoFi covered call early. But again, we are still just 2 hours into the market, so we do not know how things will turn out. Yeah, like I said, I could buy SoFi at 18. I got no problems. I think you can see my average around $16.50 after I've averaged up across the last couple of months. To me, how I decide whether or not I want to average up is because I usually have a 3 to 5 year midterm kind of projections for the company, and I see SoFi getting to $45 at least in the next 3 to 5 years. If you ask me, I do think macro recovers. 45 end of year still possible, right? But I do not invest based on I hope SoFi gets to 45 with a good macro. I assume the worst case and everything. If SoFi gets to $45 in 3 to 5 years, will that return work for me? To me, it does. And so it's basically 3x in 3 to 5 years. I don't mind that kind of returns. That's why I invested in SoFi. So I think for my investing philosophy or my investing style, I'm not someone that always tries to chase the next 10x. I go for the more, I would say, predictable 3, 4, 5x's. And I think that's an easier way to invest. I think to get to a 10x like Palantir, it really takes a little bit of luck and execution. But I think it's easy, and to pick 10x companies is really not that easy. But I think if you are looking to compound at a sustainable pace, if you're picking companies that tend to 2, 3, 4x on a consistent basis, and these companies are usually easier to find because there are some fundamental metrics that need to inflect up in order for that to happen, then you can actually do pretty well for yourself in the markets. BMNR next 10x, I also hope so. I think I'm not too sure whether or not which cycle it will happen, this or next cycle. But yeah, I think if Ethereum gets to Tom Lee's target, honestly, if you ask me, I find it very hard to envision Ethereum at $65,000. If I'm being very honest, I can see $12,000, right? And if Ethereum is $12,000, which means Ethereum would have around 6x from where it is today. BMNR trades at some sort of multiple over Ethereum. yeah, you can argue that, they can potentially get there. But again, we really don't know. Okay, so this is basically in the main portfolio. Like I said, I will be updating this every now and then. It's just that I'm not going to really keep track of this publicly, because I withdraw from this quite frequently and I have to pay for my renovations and all that this year. So, it's not going to be super accurate. Okay, the next thing I want to show you is that I've sold the cash secured puts on two new positions. Let me Okay, so the Weibo one is done. All right, so if you take a look on screen over here, what you are going to see is actually the public portfolio. Now, if you take a look at the before I show you this, I should just show you the public portfolio first, rather than show you on screen, because I haven't really edited the. So in the public portfolio, you can see that today we are basically more or less flat around 99,000, but we have added a couple of positions to this. So the Grab position, no change, 1,500 shares, cost basis $4.24. Now you can see over here we have sold two cash secured puts on Robinhood at $70, expiring 2nd of April, so 2 weeks out, at around $2.70. Now, of course, this is down today because Robinhood is down. I already have certain levels in mind that if we get past certain levels, I will be buying Hood, even though I'm not buying it in the 70s. But right now, I believe the market is range bound. I believe because of that, companies like Robinhood will continue to trade range bound. So I'm not in a hurry to buy. Now, of course, if we do get some sort of breakout, if you get some sort of de-escalation from the conflict in the Middle East, markets start to recover, and that's when I will just close the cash secured puts or let it expire worthless and just buy at whatever price at that point in time. So there are certain levels that I'm looking at, but I'm not in a hurry to buy right now if the conflict in the Middle East still continues to persist. Second position, you can see Zeta at $16. I sold 7 cash secured puts over here at 47 cents. So basically, we received around okay, I can't math right now. We received $540 from Robinhood, and we received around $300+ for Zeta, right? So over $800. You can see that the Amazon put is about to expire. So right now, I am again going to do something fairly, I wouldn't say risky. This is not risky in the sense that, the worst thing that can happen is you keep the premiums and you don't do anything else. Yeah. But I'm going to let this expire worthless. I mean, the good thing about Mumu compared, in Weibo Singapore, you can't sell options on margin. You need to have the cash on hand, which is relatively irritating. So over here, for example, I would have to close out this Amazon. I mean, yes, granted, it's just $2, but I'd rather just let it expire, worthless. I mean, $2 is still a cup of drink, at least in Singapore. You can buy drinks for $2. Right? So I would just rather expire this worthless and sell another cash secured put further down the line. So that is exactly what I'm going to do with Amazon. But in Weibo, because they peg the contract to the amount of cash that you have in your account, you're not able to do that. You have that, which is why I had to close my BMNR $16 put one day early just to sell the $18 cash secured put on BMNR, because otherwise they would have assumed that your cash is being tied up. So I called into the Weibo team and they tell us, oh, sorry, in Singapore, we haven't allowed you to sell cash secured puts and covered calls on margin. So, nothing much I can do there, which is why I decided to do this on Weibo. Elijah has BMNR. I have 5,000 shares, over 5,000 shares of BMNR. This is the public portfolio. There's no point of me repeating the positions, right, other than SoFi. But my problem with this portfolio is that it has the biggest hole I see in this portfolio is that it has no real exposure to Ethereum. For a moment, I contemplated buying SBAT, but I can't after understanding how treasury companies work, I can't bring myself to buy a treasury company that is trading so far below its MNAV. I'm at the point where I'm thinking, you know what, perhaps I'll just go and buy the Ethereum ETF. I believe that there's a iShares Ethereum ETF. Yeah. So this is what I may buy to give me a little bit of Ethereum exposure. Because I don't want to buy BMNR, I can't bring myself to buy any other digital asset treasuries. It's not because I'm loyal to BMNR, it just doesn't make sense. Like, why would I buy a digital asset treasury if they're trading below 1 times MNEF and they're not buying Ethereum, right? I would rather be taking the cash and going to buy Ethereum outright by myself. And the thing is, with Mumu, they separate your crypto and your cash and your trading account. So every time you look at this account, you're going to see a bunch of money missing because it goes into the crypto account, not your main trading account. So it becomes very hard to aggregate this. ETH. Oh, this is the staked Ethereum ETF. Okay. Okay. This just came. Oh, this just traded today? Am I right to say that? Wow. Okay. Oh, I did. Oh, I didn't know that their staked Ethereum ETF is already tradable. It just came online today? Is it today? No, a while back. It's just my screen doing something weird. Is it 2 months ago? Let me see. What's up with my? Oh, okay. There we go. Okay. It's really low volume. Liquidity is not very high right now, but all right. Oh, you know what? I really didn't know it was tradable already. I only knew about the ETH. Oh, it launched yesterday. Okay. Why do I have all the way? Oh, this is all right. All right. Interesting. Interesting. Wait. Oh, thank you for this, Cyberforms. Okay. See, now you're getting me down this rabbit hole. I want to know what happens because I have never bought something like on the day or the day after it released. What happens to the liquidity world? Oh, it's just like that throughout. Okay. I'm guessing it should match the price of Ethereum fairly closely. Okay, okay. Oh, this is an interesting. Okay, I'm gonna ask. Can I sell options on this? This is important. I already have Grab that I can't really sell options on this, and I know it's only 2 days, so it might be a little bit. Yeah, there's no. You see, oh, ETB. It's still too early to tell whether. Yeah. Hi, Serge. Welcome, welcome. I've just been told that the staked Ethereum ETF was launched yesterday. You can buy it, and I am like seriously considering. Maybe I should just stick to the A one, sell options on it. Should I? And then move to B when. I mean, if they track the NAV pretty closely, then if I get A, sell options. Once options is loaded on ETH B, then I will move over. What do I think on Grab? Well, I hold it. It's 5% of this public portfolio. Um, yeah, it's too new. So maybe I will do ETH A for a while and then yeah. Okay, really, thank you, Cyberforms. I will look into it this weekend. I will look into it this weekend and make a decision. About Grab, I like Grab. I believe I spoke about Grab in a couple of streams ago. I will try and clip it out for you guys, but I think by and large, the main thing that you have to understand about Grab. Okay, I really got to go in 10 minutes, but the main thing that you got to understand about Grab is that the fears of them lowering their profitability and lowering revenue, I think is actually a little bit over-exaggerated, because you got to understand, Grab is operating primarily in Southeast Asia. Now, with the Southeast Asia customer base, a lot of them are not from very well-to-do nations. We explored it the other day. Like in Singapore, being just a 6 million people nation, we generate more revenue for Grab than somewhere like Indonesia with over 200 million people. So you can see the the wealth gap is actually pretty big between like Singapore and some of the other nations around. So what Grab is essentially doing is that they're focusing on their affordability options. And so what this means is that they're trying to gain more users into their ecosystem, and they're willing to forego near-term revenue growth as well as profitability in order to do that. And that is why the market sold them off, because they expected them to come in with, I think, $937 million in revenue. They came in at 917 million. But you have to understand that if you are investing in Grab to get exposure to emerging markets, then you have to understand emerging markets. The thesis for Grab is not that eventually they're going to have some sort of parabolic revenue growth, but as the region gets more and more middle class, or as the region grows its middle class, these people being already on Grab, even right now, they will continue using on Grab, and they will deepen their engagement with Grab, which will over time drive a longer term revenue growth. So Grab is only projecting, and I say only, knowing that even growing at 20% is still a very healthy rate. 20% revenue growth, at least from now to 2028. And then at that point in time, we might see an inflection upwards if they do see the demographics start to get more and more, the middle class in this area start to expand, which is exactly what we're seeing with some of the countries in Southeast Asia. I think Thailand, Vietnam is in particular, they are benefiting from the travel economy coming back into Southeast Asia. I know there are tons of people from China that love to visit Southeast Asia. So I think in the long run, if you are investing in Grab, you have to understand the thesis. It's not about just revenue growth, but the strategy over here in Grab is that they want to gain market share, and they will monetize their users over time. So what that means, as one of their affordability options, they are even delivering food out to the rural areas in some of the other countries. Not every single country in Southeast Asia is as connected as Singapore or some of the main cities in like Malaysia and Indonesia. And so they're allowing, they're basically, helping to deliver, bringing some of the food options closer to people in the rural areas, although those might be of a lower income bracket, but because they want these customers on their platform, interacting with their platform, so that eventually, as they benefit from the growing middle class in Southeast Asia, then their overall net spend on the app will start to increase as well. Why not just buy more BMNR? Because I have chosen not to buy BMNR in this portfolio. I already have, I would say, nearly $200,000 in BMNR in my other portfolio. So in this portfolio, I'm trying not to repeat the positions. The idea over here is because I want to be focused on the AI trade. I want to be focused on fintech and the blockchain. So these are the three main thematics that we are investing in this portfolio, but to diversify out from what I have done in my main portfolio. So that's why we are going into some of these other names. However, I've been having problems trying to find a name that I can invest in that gives me exposure to Ethereum. So that's why Cyberforms earlier suggested ETHB. Hi, Jess. Stock market is a trader's dream because people don't know what to do right now. Like I said, the S&P, the Qs, everything seems to be in no man's land at the moment, trading in between the 50-day and 200-day moving averages. I think we are just basically waiting for either good news to break up or bad news and we're breaking down. All right, so this is basically what I have done over here. What I'm going to do now, I'm going to sell another put on Amazon before I forget. I think I am being a little bit greedy. Oh, talking about Amazon, I was just talking about this yesterday. We have a 50-day, I think, okay, it's called a death cross. Sometimes I'm a little bit careful in using some of these terms because I think people don't understand what it means. But basically, the orange line is the 50-day moving average, right? So that's the average price of Amazon across the last 50 days. I'm using the simple moving average, not the EMA. And then over here, the blue line, this is the 200-day moving average. So when the shorter term moving average, the 50-day, crosses below the longer term moving average, which means that on the shorter term, the downwards momentum is stronger than the long-term momentum. So the long-term momentum, which in this case is the blue line, can still be trending upwards while the short-term momentum is coming down, which is why initially I was thinking, oh, you know what, should I just buy Amazon at 210, which is what I was saying, I think, back on Monday. But after seeing this death cross form, I think probably not. I would want to try and be a little bit greedy. So I know, okay, in my head, I already prepared. If there's a quick bounce, I'm going to buy at 210. Otherwise, I'm going to sell put. Again, everything will expire on the 2nd of April. You see, just nice. When I'm back from Vietnam, everything will close. You see, you can get another $310 in the next 2 weeks to buy Amazon at 195. This is the third time I'm doing this. I already gotten near $1,000 selling puts on Amazon, doing nothing. Sounds very nice right now. Like I said, if Trump comes out and say that, guys, war's over, we won, going back to America now, of course I'll be screwed, right? But that aside, if I can get in $3, last sold 310, now it's around 295. Okay. Oh, you can't touch options. Okay, due to being in a. Oh, okay. Well, technically, I am working in a financial institution as well, but thankfully, I don't have such restrictions. Let me go and see my Amazon, because I have no insider info on anything, so that's fine. All right, if you take a look at, okay, I think I'm going to sell. Okay, so this is the math right now. Once I'm done with this, I really have to go. I will be on Monday. I might be a bit late on Monday, similar to today's time, but I can stay longer. Okay, because I have really, I would say, my last dinner in a long time. Oh, no, not last dinner, last, like, dinner with friends, like gathering in a long time. So Butterfly Networks, what do they do? I don't think I have heard of them. Someone asked me to look into MeTech yesterday, I think, or Wednesday. I'm going to look into them on the weekends, but yeah. I mean, I like the risk reward for Grab if you are able to get it in near the April lows. Sure. Okay, so this is our Amazon position. You can see we opened a position. We opened a cash put on 9th of Feb, closed it entirely on, when did we close it? 28th of Feb. Today, I'm assuming Amazon is not going to drop to 195 by the end of today. So we're going to have a close. We are going to realize the entirety of the premium. So which means we have around $500 in premiums already collected. And let's say today, 13th of March, I sell another cash put. I sell another cash put expiring 2nd of April at 195. One contract. I believe the price now is around two. Okay, let's say I get 295. I better sell it first before I. Okay, I already put the. I'm just putting the order in right now. Give me a minute. This is what I like about options. I know that there are downsides, which really I can't emphasize, that people that talk about options online don't emphasize. Oh, it just got assigned to me. Give me a second. Okay, let me see the price that I got this at. Well, 295, fantastic. Okay, so basically what just happened is if you take a look, okay, later I'll show you the transaction. But on screen right now, basically what you're seeing over here is that we have just sold yet another contract of Amazon at a slightly higher premium, $295, right? $295 expiring 2nd of April. So in another around 2 weeks. Currently, it is at 295, but we are expecting to close this at least on the 2nd of April. We are expecting that either we will get a sign at 195 or this expires worthless, right? So either way, closing price, I'm going to put at 0 because even if I get a sign, I'm just going to let it get a sign. Okay. Between now and 2nd of April, this would work out to be a monthly yield of 2.3%. I think someone was asking me how I calculate the yield. The yield is very simple. You take $295, divide by the $19,500 that I got to keep aside as collateral. Now, then it will seem like, oh, it's a 1.5% yield. How do you get 2.3%? Well, you just take this number, all right, 1.5%, divide this by the total number of days. So between now and 2nd of April, 20 days. And once you get this number, multiply the entire thing by the number of days in the month. So it's around, I usually just take 30. And then that's how you get the 2.3% on a monthly yield basis, right? So although the reason why I count it on a monthly yield is that because sometimes I do my options on a weekly or fortnightly basis. And so what I want to know is that if I sell the options at a fortnightly basis and I do it twice, as long as if I get 2% each time, overall in that particular month, I will receive 2% yield. Okay, so from here, you can see right now, I will minimally receive $790 in premiums. Why does this make me comfortable? Because if I go out and just buy 100 shares of Amazon, even at $210, my adjusted cost basis would be 202. My personal buy range is between 190 and 220, this $30 range. I am obviously being a little bit greedy now, not wanting to buy it at 207. If, like I said, I have okay, if you're in one of these two situations, please do not follow me, okay? I'm doing this because this is a public portfolio and I'm trying to optimize the capital. If you have never invested before, the best time to invest really is always today, right? Oh, no, sorry, the best time to invest was 10 years ago. Next best time is today. So like I said, if you do not have a position in Amazon, please, don't nitpick over. You are going to regret. Okay, if you believe in the Amazon story, if you believe in the Amazon story, assuming that is true, you are going to regret not buying at 207. Honestly, because if Amazon does what it's going to do, if Amazon gets to 280, $300, you're not going to bother whether or not you bought at 207 or you bought at 195. I am just being, admittedly to you, a little bit greedy right now, trying to optimize every single dollar. Please do not follow this, okay? The correct, wise, smart, safe thing to do is just to get in right now. End phase, yes, that's why I think a lot of end phase is something that it's a cyclical trade. Their inventory levels are coming down, which is a good sign. And I think because their inventory levels is coming down, I feel a lot safer with their margins expanding again. And yes, plus the moving into commercial definitely helps as well. Butterfly has a partnership with Mid Journey. Okay. Handheld ultraviolet sound. Okay. B-Fly, is it? I'll take a look at it over the weekend. Yeah, I'll take a look at it over the weekend together with MeTech. I think someone is asking me about that. If you consider electrification prices increasing so fast last year and increasing this year, the loss of tax credit for residential is not that much. Yes, that is true. That's one of the reasons why I think some of my friends wanted to enter into a solar play, and I told them end phase around 70 and below, it's perfectly fine. And I think some of them actually doubled down when it hit $28, $29. Now, and I really have to leave now, but just, yeah. So this is basically, okay, I have to help clean up. and then I'm going out for a bit. Like I said, I will be on Monday, same time around 10:30, but I won't have no end time, so you can ask me all you want, right? And I will do up the entire portfolio nicely and everything. Because LNG generators are backordered, the most likely energy source to be utilized first. Yes, understand. All right, guys. Thank you for your time. It's been fun talking about the portfolio. On Monday, I will be talking to you guys about Reddit and Zeta. Now, if you guys, anyone that is listening or anyone that is going to be listening to this, you are bullish Reddit, please come ready to convince me on Monday, because there are some fears and worries that I had about Reddit, which is why in terms of advertising play, I went with Zeta. Yeah, but if you guys, anybody holds Reddit, anybody knows the thesis around Reddit, I'm trying to study it. Some people have recommended it to me as one of the positions in this portfolio. There are some things I'm worried about, and I will discuss it on Monday. I wanted to discuss it today, but we really don't have the time. But Monday, okay, I will come around 10:30, and I can stay for longer. Thanks for your time, everybody. I will see you soon.